What's up, Mortgage Coach community? I'm with Chris Hallows in Flagstaff, Arizona. What's up?
How's it going, Dave?
It's going good, buddy.
Good.
So you were obviously tearing it up with Mortgage Coach. I noticed that you did like 74 TCAs last month, so you're kind of busy.
Yeah, we're hustling after it, that's for sure.
Nice. Well, congratulations on becoming the branch manager of the Flagstaff branch, and congrats on still doing a lot of production.
Yeah, I'm learning that balance and to wear two hats on that for sure.
How many loads did you close last month?
We did 17 with just my own team's production.
Nice. And how many do you think you're going to do this month? May.
We're on slot, so we're on slot for about 10 to 12 is what we're shooting for there.
Good. Well, you are clearly doing great things. I would love to know how you're using Mortgage Coach most often in this market. I know last month, while you're purchase focused and that's the majority of your business, you did do some refis. So I want to hear how you're using it day to day, and then I want to also hear how you're using it in today's market.
Definitely. So yeah, our team is we've been solid Mortgage Coach users for several years, where we do believe, it's not just lip service, that every single client gets a TCA. So we're saying that total cost analysis on every single purchase, especially using it when I do I'd say I'm 70% in my market, maybe unique to that, but I'm 70% face-to-face, maybe 60% to 70 face-to-face. And then every other client that I'm not face-to-face with or over the phone, we specifically tell them to be in front of their computer that we can do a live edge with, which is totally priceless. But now we've also built it into our refi strategy, as we've not been in that refi dip for a while. And so it's been, as we've honed in on trying to spend time with that purchase lead and capture that market, to really utilize the edge and total cost analysis to help us be more time efficient on the refi marketing.
Love that. So just so everybody caught that, you said 60 to 70% in your office.
Yep.
30 to 40%, just phone and internet. You are scheduling an appointment so that when it comes to going over the mortgage options on the total cost analysis, you're doing that with the interactive live feature, Mortgage Coach Live, so that it's this educational experience. Now, go ahead.
Oh, I was just gonna say, yeah, because I really believe in that differentiation factor, and especially when they aren't, we get a lot of second home buyers up in our market from Phoenix and Scottsdale area, and if I am just gonna be an online lender to them, that they can click and get mortgage without offering advice, that's where the live edge really helps me differentiate myself.
Love that. And then in terms of the kinds of strategies that you're showing people, what are the most common scenarios that you're going through and you're showing folks?
So I would say that really, I'm going to kind of oversimplify it in maybe two categories. With our first time home buyer or lower down buyer, we're strategizing on a lot of different products for them. Especially our market may be a little unique to somewhere. We do have a lot of different product and offerings. We do have a lot of USDA. We do have manufactured housing. We do have, so we go into a lot of different product analysis with that first time or a lower down buyer. But then we're also in that higher end buyer. It's more of net worth strategy, basically saying, hey, should you pull all that money out of the bank, and different price point strategy. So using edge to help educate them on the long-term cost of their money.
So you're going, and hope everybody's hearing that, you're going and you're focusing on the long-term cost. I mean, every loan officer is going to focus on rate, payment, cash to close. You're obviously covering that, but where you're really differentiating is the long-term benefits and the long-term difference between different options. Now, one of the things I've been trying to do is get scripting. Like, how are you positioning yourself different than the average loan officer as a mortgage coach? What does that sound like? And what does it sound like before you give them the mortgage coach, so that when they get it, they're excited about it and they know what they're looking at?
Well, and yeah, I guess I don't recreate the wheel too much there. So sorry to be boring here a little bit. Is I just use a lot of the scripts and lines I hear from you in the community. We are into the whole Todd Duncan seen as well, to where, you know, I position myself initially with each and every client, that my key value to them is being able to strategize over their long and short-term costs, and that over on and beyond just quoting them rates, fees, and payments, that we want to make sure that their home decision fits in their life. You know, we rebranded our whole team as your life, your home, your way. So we really want to focus on that. You know, we really try and get them that thinking that we're going to have a big debt strategy conversation. This isn't just a payment and rate thing. So when we position the total cost analysis with them, and you know, a key factor when I sit down, so here's kind of my turn point with a lot of the clients is after I go and say, okay, this is your score. This is your, when I start my high trust interview with them and tell them their score, their debt to income. So we kind of cover pre-qualification issues. And then I segue into, okay, what are your goals, right? And then when they've talked to me about how long they want to be in the house, any other financial goals they have, then I play with the total cost analysis a little bit before I show it to them, to then be able to say, okay, you said, you know, that you might need to buy a car within the next year. And so along with that is, you know, yes, we could do this really low interest rate, but what if I could get you into a rate that saved you $4,000 up front? You're only planning to be in this home for 3 to 5 years. You know, that's the kind of thing to where I'm trying to grab a specific couple of things from them to hone back in on that TCA.
Cool. Well, let's pull up a couple TCAs. I don't know, you gave me one purchase and one refi. Any preference on which one we talk about first, and just kind of walk through how you're advising clients?
Yeah, let's dive into that purchase that you have up there right now.
Okay, cool. So tell us a little bit about the story and the strategy behind this one.
So this is a client who has come back to us. We've been working to establish credit, so getting that back up into speed, so they could actually qualify. And this client actually was looking at some different product last weekend. So it's kind of interesting where we had a shift. We initially spoke with them about different options on last week on what was probably best for them, which the latter two columns are USDA financing, which seemed to fit their budget a little bit better and their goals of wanting to, you know, they can pull 401k money, this particular client, but I advised them that if we could do a zero down loan, that would probably be in their best interest to keep money in their 401 and actually give them a very, very attractive payment. Now, over the weekend, they discovered some manufactured housing, which USDA in Arizona will not do an existing. So we had to update on the conventional versus FHA. So it was really cool this morning. I literally just shot this to this client this morning, that they're able to see. So there you are on the in the summary section there. They're able to see that a conventional loan based on current credit scores is not what they want to do, right? We're seeing that we're $253 more per month. And right out the gate, that client knows what kind of offer they want to put in. Just because as a first-time home buyer, there's lots of different opportunities. They want to know that I'm always giving them the best opportunity. And this easily shows that to them.
No doubt. Gives them options. Did you touch on any of the benefits over 60 months or 15 years? Was this a factor at all with this client?
So it definitely, usually initially we don't spend, well, in this kind of client, in this analysis, definitely we look, you know, I tell clients a lot of times I make decisions in the orange bars, just because, you know, I set that and I'll play with that 60, just like I was telling you, if a client says I'm going to be there 10 years, 5 years, whatever, I will cater that to that client. So then they'll see, well, what saves them the most? You know, so this particular client could see, well, you'd be way better off, even though we're playing with different price points here, that, you know, if they can find a single family USDA, this is actually now even directing the product that they're going to pursue with the real estate agent. And I share this with all the real estate agents after I meet with clients, so that they know that we're looking out for their best interests.
Now, what about, do you ever take like that $253 and put that in reinvestment just to show how they could save even more interest and pay off the house faster? Is that a strategy you ever do?
Yes. For not necessarily for this particular client, but especially we do that a lot on our refis, and then a lot on our other clients who are, you know, I sat with a client just last Friday who is going to sell in 2 to 3 years and want to buy that retirement home now, but wanted to determine, okay, how do we accelerate the payments? Which mortgage is going to be better off? And definitely use that reinvest strategy a lot.
Cool. Anybody listen to this, do recommend you do, and I'm not saying do it every time. It's got to be tailored. You know, notice, you know, Chris is asking questions, understanding goals, and then he's putting a total cost analysis to help them achieve their goals. And we don't want to fire hose them. We don't want to talk about things that aren't on point for them. But do remember, if it's on point, put in that $253 and show how much faster that could be paid off in reinvestment. Could be a really powerful strategy.
One time I think,
go ahead.
I was gonna say one time that I'm just thinking that we really use that a lot is actually when I have a client that says, hey, I'd really like to do a 15-year mortgage versus a 20-year versus a 30-year. So I really do that a ton. And when we pull that in and say, well, do you prioritize freedom over, debt elimination? And to be able to show them, and most of the time, actually, a lot of the clients, especially if I'm sitting across from, I'm in my 30s, I'm a young guy with the young kids and family. And if I'm sitting across from a young family and say, hey, you got a lot of expenses, you got a lot of savings you need to do between now and paying off that home. If you have the discipline, a lot of times I'll show them you can still accomplish that goal with a prepay and not necessarily stuck in a 15. I do that quite a bit.
Yeah. And I still think it's a good idea to show it because it just shows I'm going above and beyond. Most companies, most families don't expect you to say, hey, let me show you how to save interest and pay me less, because they think of you as a lender, pay the lender less money. So it always just, just the fact that you showed them that strategy kind of goes, oh, that's extreme transparency and it's in my best interest. So I still think it's a good feature to show. Not every time, but sometimes. So just want to make sure everybody on the call knows how to use that feature. So Chris, let's talk about this refi, because I know you did a number of refis. I love the way you use a mortgage coach to do, I don't know, what do you call it? Annual reviews, quarterly reviews. This particular case looks like, well, tell us what you did here.
So that's where, so my typical process on a purchase is that I meet with every client at TBD stage, before they found the property, and then I meet with them again at point of contact or contract. So with the refis, and trying to get after the refi marketing, I wanted to leverage my my TCA, the total cost analysis, to actually save me a little bit of time. And when a lot of our clients are getting those mailers on telling them, some off the cuff savings per month that just wants to cloak and dagger them in the door, I wanted to educate them with the TCA, but lead with it. So I've actually been, my strategy is I've been giving a phone call saying, hey, I think we can save you money on the refi before I even pull credit or before we do any appraisals or anything. I'm going to send you a total cost analysis based on your previous loan factors and let you know how much we could save you. And if you're interested at that point, then we can take next steps. So that's where I just create this total cost analysis. I'm populating the current with all my past data on the client. And then, so this is on a VA IRRRL. So I'm able to easily show this client that they're saving $136 a month. I put that in bold in my email when including the link for the TCA, and the email's back. So I was able to add 7 refinances to my pipeline just last month with this strategy, to where basically they're coming back and just saying, what do I do next? Right? It's not we need to sit down or let's do that. I basically say, okay, now I will pull credit and make it official and let you know if anything changes on your pre-qualification parameters. But yeah, it's putting the information out there first in a little bit, and it's not that much work once you're copying and pasting and have your templates right. It really just gets the rubber to the road real fast there.
So couple tips for everybody listening to this, because I interview a lot of loan officers on this strategy. And in the email, I do recommend that you mention the monthly savings and the savings over 5 years. Always like, that's $7,282 over 5 years. You might even want to bold that, blow it up. And then I do recommend throwing in the, hey, if you paid that 136 and you prepaid your mortgage, it would be this much and you'd pay off your house 7 years faster, or whatever the number is. It's like monthly payment, 5 years, and you're paying, if you keep making the same payment, you pay off your house X years earlier. Let me know if you want to be debt free faster. It's blowing it up. So one, makes the email more valuable, and two, more likely that the client's going to move forward rapidly. Anything else? Are you adding videos to these very often? How often do you use the video feature?
Yep. And so in the refinances, I'm like 90% sending video feature to be able to explain that to them and walk them through. And especially that helps me to not only talk through the edge analysis, but to also get kind of that next steps, right? Because they're looking at, they're seeing, typically they open that up, the savings, 136 a month and 7,000 or 5 years, they're already pretty peaked interest. So it helps me to be able to break that out and say, okay, here's the next steps in a quick, like 60-second video.
How many past client loans did you do last month? How many loans for past clients do you? And if you can't think of it off the top of
your
head,
well, I'm set. Well, so 7 loans were refinances. Those were 100% past clients, and then my book of business is 40% past client, and 50% realtor referred, with 10% ancillary there. So I mean, you'd have to find those numbers. Yeah.
Well, congratulations, man. So you are a top mortgage coach. I doubt if there's anyone in your market that's done 70 plus TCAs in the month of April. Can't wait to see how many families you give a total cost analysis this month. Now that you're a branch manager, knowing that some of the guys in your branch are going to watch this, you're a leader in the mortgage coach community. Any last words of advice for the mortgage coach community?
Yeah, it's kind of the same vein where I think we're all in there's going to be the two different breaks in our market of price and advice. And you have to be able to use tools. And the strategy, I picked up a couple things from you just now. So this is totally worth it for me, Dave, in saying, stick to the advice, know your strategies, and take time to be educated on it, because so many people are getting caught in that price trench and are playing that game, and it's a losing game.
No doubt. And now that you've done as many total cost analysis as you do, does it save you time? I mean, it doesn't take more time, it saves you time.
Oh yeah. I was for like the first 6 months that our company had brought this on board, I was not a fan and user, and it's just, I wasn't ready to adapt and adopt. And now it definitely saves me time for sure. To go back through, like, what are you going to do through your LOS and print out all sorts of different worksheets and have to change it. And for as quick as I'm live with the client, they're on the phone with me, and literally their TCA just changes in 5 seconds. When I said, oh, I'd really like to see that price point, and it's done, changed, and live to them. Yeah, big difference.
Yeah, and that's the thing. I talked to a loan officer at a sales rally, and he's like, oh, I don't get shopped. I'm in a small market. Guys, everybody wants a total cost analysis. And once you get good at it, it makes things faster and easier for you. So if you've got a takeaway from today's call, give us a like, share it with your mortgage friends. Chris, I appreciate you, brother. Thanks for being a leader in our community, man.
Awesome. Thanks, Dave.
All right, take it easy.